everyone, in this course we are going to learn how to use the engulfing bar candlestick pattern as a base in candle. The engulfing bar candlestick pattern is formed by two candles. This pattern has a pretty easy to recognize structure. It consists of a candle which gets engulfed by the next candle, and to get a valid engulfing pattern, the first candle should completely fit inside the body of the next candle. In fact, there are two types of engulfing bars: bullish engulfing bars and bearish engulfing bars. Let's start with the bullish engulfing bar. The bullish engulfing pattern could be found during bearish trends. It starts with a small candle, then this candle gets fully engulfed by the body of the next candle. As you can see, the prior candle is completely engulfed by the second one. Sometimes the shadows and noses are not engulfed, and this is not a problem while the body is totally engulfed. When the bullish engulfing pattern forms in a demand zone, it can be used as a base in candle. Look at this example. This is a bullish engulfing pattern. When it forms at the beginning of a demand zone, it can be considered as a base in candle. And to draw the zone, we draw the proximal line at the close of the first candle and the distal line at the lower shadow of the second candle. Let me give you this example. As you can see, this is a demand zone. A bullish engulfing is the base in candle, so we draw the proximal line at the close of the first candle and the distal line at the lower candle. You know, sometimes the second candle engulfs only the real body of the first candle, and in this case, we draw the distal line at the lower shadow of the first candle and the proximal line at the close of the candle. Look at now some real chart examples. This is the AUC GPY daily chart. As you can see, this is a drop, base, rally, demand zone. The base in candle is this bullish engulfing bar. To draw the zone, we draw the proximal line at the close of the first candle and the distal line at the lower shadow of the second candle. As you can see, we got a nice demand zone. When the market returned to test the zone, prices went up strongly. This is the pound franc Swiss 4-hour chart. This is a drop, base, rally demand zone. And this bullish engulfing is the base in candle. So to draw the demand zone, we draw the proximal line at the close of the first candle and the distal line at the lower shadow of the second candle. And as you see, we got a nice demand zone. When the market returned to test the zone, it was strongly rejected. Let's move to the opposite version of the bullish engulfing bar, which is the bearish engulfing bar. The bearish engulfing bar could be found during bullish trends. It starts with a small candle, then this candle gets fully engulfed by the body of the next candle. When the bearish engulfing pattern forms in a supply zone, it is considered as a base in candle. Look at this example. This is a bearish engulfing bar that forms at this supply zone. So to draw the supply zone, we draw the distant line on the upper shadow of the second candle and the proximal line at the open of the prior candle. We can draw the distant line at the upper shadow of the prior candle if the second candle covered only the real body. Look at some real chart examples. This is the AUC US dollar 4-hour chart. And this is a rally-based drop supply zone. This bearish engulfing bar is the base in candle. We draw the proximal line at the open of the prior candle and the distant line at the upper shadow of the second candle to get this potential supply zone. This is another example of the Euro Pound 4-hour chart. This is a rally-based drop supply zone. This bearish engulfing bar is the base in candle. So to draw the supply zone, we draw the distant line at the upper shadow of the prior candle because the body of the prior candle was fully engulfed, but we still have this upper shadow, and the proximal line at the open of the same candle. As you can see, when the market returned to test the zone, prices went down again. Look at another example. This is the US dollar Canadian dollar 1-hour chart. As you can see, this is a drop-based drop supply zone. This bearish engulfing bar is the base in candle. So we draw the distant line on the upper shadow of the second candle and the proximal line at the close of the same candle to get this supply zone. When prices returned to test the zone, the market was strongly rejected, forming a nice pin bar.